Hey, what's up, guys? Thanks for stopping by the channel. My name is Courtney Golden. I'm a Flex Financial Wealth Coach, and this channel is all about trading and investing in the stock market. We always like to give you guys some helpful tips, thoughts, and ideas, things that are working for us in our own accounts. And we like to share from our own personal experience, things that have helped us over the years become successful in the market. And we like to get back and help other people because we understand the stock market can truly be confusing, and it can be a frustrating place and a foreign place to a lot of people. So we like to try and simplify it and give you some things to think about from our own personal experience and hopefully help you out in your own trading. So if you're stopping by the channel for the first time and you're looking for helpful information about the stock market, then please consider subscribing to this channel. You're in the right place. That's what we like to do. And we like to give it back for free, right? So it costs you nothing. Subscribe to the channel. Also, you can hit that notification bell and we'll alert you anytime we upload new content to the channel here. We're going to get more consistent with that. Definitely appreciate your support as we're looking to continue to grow our Flex channel. So today, really the topic is all about getting real when it comes to expectations in the stock market. So when I talk about getting real about the market, I'm talking about the money that you want to make, right? How much you want to make in the stock market, the time it's going to take you to make that kind of money in the market. What kind of money do you need to make that kind of money in the stock market? It's all about getting real and being real, having realistic expectations about what the market can do for you. So reason I want to do this video is because we talk to a lot of people every single day that are looking to get started in the market. Now, obviously, we have a program that helps people do that. And we talk to a lot of people about their goals, about what they're looking to accomplish, how much money they want to make. And a lot of people have big dreams. They got big goals when it comes to the market, how much money they want to get out, the things that they want to get out of the market, which is fine. I definitely encourage you to have goals. That when it comes to the market, goals outside of the market, goals are great, right? But it's also important to be realistic and really understand the kind of results that are typical for the average investor or trader in the market, right? Very important just to have that idea of what the market really does on an average basis, right? Of course, we want to strive to be above average, but you still want to understand what are the average type of returns that people get in the market. And also you want to understand how long does it take to get those kind of results and how much money do you usually need to get those kind of results that you're looking to get, right? Seems like a lot of people that are brand new to the market, they just have this fantasy in their head of all this big money that they can make in the market. It's not going to take them a lot of time to do it. They don't need a lot of capital to do it, right? They're looking to take $500 and turn it into $50,000 by the end of the month, right? People are looking to do these quick flips with their money. You know, what's the next big play that I can get in on? I need to make money fast. And they're not really truly looking to build wealth, right? Sustainable long-term wealth, which that is truly what the market is intended to do. It's intended to be a wealth builder for people that truly understand how it works, right? So there's just big misconception about the market, and that's a big reason I want to do the video today, just to kind of level set people, right? And bring you back down into reality and tell you to get real. You got to get real, right? And in most cases, just the expectations and things that people are looking to do in the market is just not true. And really, I blame social media because of that, right? There's a lot of programs out there now. Of course, we're not the only program out there. A lot of programs out there, a lot of stock gurus, a lot of coaches, things like that. And there's just a lot of false information, a lot of bad information that's being shared. There's a lot of good information too, right? You got to filter out the good from the bad. But unfortunately, there's a lot of bad information, a lot of false information, and just like images and people portraying this big success in the stock market that in reality is probably not true, right? So when it comes to the market, I thought I'd share some statistics with you on some returns, just a few, right? The average rate of return in the S&P 500, top 500 companies in the market, over the last 5 years is 54% total, right? So over the last five years, the S&P 500 has returned 54%, right? That is a little over 10% per year, right, on your money, right? If you're matching the S&P 500 return. The average return in the S&P 500 over the last 10 years was 142%, right? Sounds like a great return. It is a great return. If you're letting your money ride and just go to work like that and it's keeping up with that rate of return. if you take that on average, that's about 14% per year over the last 10 years, right? The average yearly return for a 401k, a retirement account, right? Those of you guys that got 401ks with your work or you got your IRA set up, the average retirement account return is 5% to 8% per year, right? That's annually. So if you have a 401k, you got an IRA, you got $100,000 in it, that means on average, on a yearly basis, you're making about $5,000 to $8,000 per year on that money if you're keeping up with the average rates of return, right? A lot of people that are doing this on their own, they don't have the right financial education. A lot of people aren't keeping up with these averages, right? But if you're keeping up with those averages, those are kind of the numbers that you should expect in the market, right? So I say all this to say, really just to give you an idea of what average returns look like in the market, right? The market is a great place to obviously put your money, and you got to be able to have the right strategies in place to kind of keep up with these type of returns. Of course, we all want to be above average when it comes to the market, and we want to get more out of our money. But at the same time, we don't need to be putting ourselves in bad spots, taking on a lot of risk, trying to do too much with too little, right, as you're starting out, right? So that's why I wanted to share some of these stats with you. So I encourage you guys, especially if you're just starting out in the stock market, you're a beginner, you're looking to get into this, you're looking around on social media, everybody's making $100,000 in 10 minutes. Everybody is driving Lamborghinis. Everybody's telling you can 10x your money in a month, right? I encourage you really to just to look into some of these typical returns and keep some of these numbers in mind. Again, it's okay to have big dreams and big goals when it comes to the market, but I will say those type of big dreams, big goals are big money returns in such a short amount of time, and quick flips and all of that. It's just not healthy. It's just not a healthy way to get into the stock market, right? But I will say, with the right system, right strategies in place, you can absolutely trade above average and get above average returns in the market. I am a testament to that myself, but it did take me some time to really get that consistency down to be able to beat the market like we're able to do with our Flex financial system, right? When I first started out, I had all these expectations, but I was quickly brought down to earth, right? As I got into it. So I want to encourage you guys just to really have realistic expectations, set realistic goals for yourself when it comes to the market. If you're beating these type of returns, 10% per year, 14% per year over the last 10 years, 5 to 8% return on your retirement accounts. If you're beating those type of numbers at the end of the year, then you should pat yourself on the back. You had a good year, right? So just want to do that quick video, tell you guys that are starting out in the market, get real, man. You got to get real. Don't buy into the hype of what you're seeing online. Yes, you can't be successful in the market and blow some of these numbers out of the water. I've done it myself and currently doing it now. However, in most cases, these are the type of average returns you're going to get. So get real and get into the market the right way, right? With that being said, just wanted to share that with you guys. If you got any helpful information out of this video, definitely hit that like button. Again, if you're new to the channel, definitely appreciate it if you subscribe and also hit that notification bell. We'll be doing some more videos, sharing some free game with you guys. So continue to tap in with us. Thank you guys for tuning in, and we'll catch you guys on the next one. You guys have a good one.